The 2025 crash won't surprise the people who matter. It's not chaos. It is a carefully planned transfer of wealth. What if I told you the crash is guaranteed not by outside events, but by 3 quiet trades, 3 secret signals the titans make to guarantee their billions and your ruin? 1 is a flight to gold. 1 is massive cash hoarding. The 3rd is the biggest volatility bet on Earth. You will know exactly how the elites plan to steal trillions. You must position yourself now before the steel door slams shut. This is not theory, this is a machine. The mechanical sequence repeats: 1929, 1987, 2008, and now 2025. You think this time is different? Look closer. It's the same dance. The blueprint started in 1929. Joseph Kennedy executed 3 specific trades. He did this 6 months before the market annihilation. Result? A massive $50 million profit while the country was liquidating. The market fell 89%, but Kennedy was already safe. Fast forward to 1987. Paul Tudor Jones didn't guess the collapse. He executed the exact same 3 trades: cash, gold, volatility. He made $100 million on Black Monday alone. The market fell 22.6% in a single session. The trades worked in 1929. They worked again in 1987. In 2008, Michael Burry and John Paulson followed the exact script. 3 trades: cash, gold, volatility protection. They made billions while the financial system burned. The voice in your head screams, correlation is not causation. It says the system is too complex. It says AI justifies insane valuations. That is the lie they feed you. Stop listening to the noise. Listen to the mechanics. A crash is not random. It follows a predictable 6-stage sequence. Extreme valuations. Excessive debt. A trigger. Forced selling. Then, pure panic. This is not biology. This is physics. What does that predictable pattern demand today? It demands the same 3 necessary moves. Watch the gears turn: cash, gold, volatility. Trade 1 is protection. It is cash. Buffett, Dalio, Ackman, they are executing this now. Buffett holds a record $325 billion cash hoard. They are hoarding the life raft. Trade 2 is wealth preservation. This is the massive flight to hard assets. It is gold. Bezos and Zuckerberg are selling massive insider stakes. They are moving to cash. They are severing their chains to unstable risk assets. They are building the foundation for generational wealth. Trade 3 is pure profit. It is the biggest volatility bet on Earth. Trade 1 protects you. Trade 2 preserves your purchasing power. Trade 3 generates the explosive wealth that follows mass liquidation. The market screen goes red, and they profit. The pattern has repeated 4 times: protection, preservation, profit. The sequence is identical every time. The secret to profiting from these guaranteed crashes is mastering and executing the sequence. The crash is not coming. The crash is already priced in. Act now. We don't predict crashes, we track mechanics. The market is not alive, it is a machine. Financial crashes follow a predictable, violent 6-stage sequence. Know this mechanism, and you know why the world's smartest investors execute the same sequence of 3 preemptive trades: cash, gold, volatility, before the collapse even starts. Every major crash starts with a bubble. Prices get disconnected from reality. This is stage 1 recognition. Smart money recognizes when valuations cannot be sustained. They see that risk now outweighs reward. In 1929, stocks traded at absurd prices. In 2008, housing prices exploded based on fake loans. Today, look at the hard numbers. The Buffett indicator currently sits at 185%. Stocks are valued at almost twice our national output. That is historic delusion. The smart money moves to cash. Then comes stage 2 euphoria. This is when the crowd takes over. Delusion becomes consensus. In 1929, stock tips came from shoeshine boys. In 1987, computerized trading was seen as the key to endless gains. In 2008, everyone believed housing prices never fall. Now the narrative is artificial intelligence. The promise of endless growth justifies any valuation. The core mistake: believing this time is different. Stage 3. Maximum leverage. The structure becomes brittle. Debt makes gains easy on the way up, but it guarantees catastrophe on the way down. 1929 featured 90% margin debt. By 2008, subprime mortgages and complex contracts created 50-to-1 debt in the financial system. Today, margin debt is near record highs. We have engineered the perfect explosion. Think of a tension wire tightening until the metal strains and snaps. Stage 4. The trigger. The first domino falls. It doesn't need to be a massive event. It is often small. The problem is not the trigger. It is the brittle structure underneath. The trigger in 1929 was a fraud in London. 2008 was caused by subprime defaults. Watch a single tiny domino tip over a massive tower of blocks. What will it be in 2025? Real estate defaults? A global shock? A major tech collapse? It doesn't matter. The system is primed. Stage 5 is forced liquidation. This is why crashes happen fast. Debt makes gains easy, but when leveraged investors face losses, the margin call arrives. Margin calls force selling. Forced selling drives prices lower. This triggers more margin calls and more forced selling. It becomes a violent, mechanical cascade. You are watching a death spiral powered by debt. Sever the tie now. Finally, Stage 6, panic. Cash vanishes. Buyers disappear. The system freezes. The VIX, the market's fear gauge, spikes to 50, 60, even 70. The market screen flashes deep red. Markets don't glide down 5%. They crash 20, 30, 40% in weeks. This is not emotion. This is the mechanical pattern repeating itself. The world's greatest investors, from Buffett's record $325 billion cash hoard to the massive insider selling by titans like Bezos and Zuckerberg, are acting now. They understand this predictable sequence. They are executing the 3 preemptive trades: cash, gold, volatility, to profit from the inevitable. Master the sequence. Profit from the collapse. The sequence is everything. The execution phase starts now. Financial survival relies on mastering the 3 trades. To profit from the inevitable crash, you must execute them in perfect order. Trade 1 is your earliest signal. It is cash. You must execute this move 12 to 18 months before the hammer drops. Why? It is your ultimate defense against the liquidation death spiral. Cash protects you from catastrophic loss. Slam the red panic button labeled cash out. To understand this move, study the pioneers. Look back at 1929. The market was manic. Stocks had tripled in 5 years. The system was rigged for collapse. Joseph Kennedy, the aggressive speculator, knew the mechanics. He made millions manipulating prices with coordinated buying schemes, using market momentum to sell at the peak. Leverage was the true enemy of the crowd. Investors borrowed 90% of stock value just to buy more shares. Margin debt was crushing the system. Kennedy saw the mechanical flaw. When everyone is leveraged and fully invested, the buyer pool vanishes. No new buyers are left. Prices fall slightly, triggering margin calls on those leveraged accounts. Forced selling drives prices down further, triggering more margin calls. This is the death spiral. Understand this mechanism. Avoid the abyss. Kennedy acted decisively. In the summer of 1929, he calmly converted stocks to cash. He moved with stealth over months, ensuring his trades wouldn't crash the prices he needed. He was mostly in cash by September. The market peaked September 3rd. 7 weeks later, Black Thursday hit. Trade 1 protected him. Fast forward to 1987. The pattern repeated perfectly. Tudor Jones ran a massive hedge fund. He saw the exact same danger in the data. The Dow had surged 140% in 5 years. Price-to-earnings ratios were too high. Margin debt was surging. Program trading, computerized execution, was the new instability weapon. Jones was precise. He steadily reduced his long stock positions throughout August and September 1987. The stock charts of 1929 and 1987 showed the same plunging arrow of cash movement. Jones warned his investors, expect a major crash. His fund held mostly cash by early October. The market peaked October 2nd. The crash came 17 days later. The golden thread holds. This mechanical repetition is undeniable. Stop. The objection you hold, that this time is different, that the modern system is too complex, is the exact mistake of every generation that was wiped out. Market structures change. Emotional mechanics never do. The pattern never changes. The smartest money always uses the cash signal. Look at the 2008 setup. Michael Burry's research into subprime mortgages convinced him the entire financial system would collapse. He started converting to a defensive position in 2005. John Paulson concluded the housing bubble would collapse the system in 2006. He launched a dedicated fund to bet against the housing market. They took protective positions years out. The giants execute trade one first. Buffett had been raising cash since 2006, finding nothing worth buying at inflated prices. His cash hoard grew from $40 billion in 2006 to over $60 billion by 2007. The market peaked October 2007. The titans were signaling panic. They converted to cash to prevent liquidation. Watch the massive wall of debt collapse into neatly stacked dollar bills. Now we arrive at 2025. The signal is deafening. Warren Buffett is sitting on $325 billion in cash. This is the largest cash position in corporate history. He is aggressively selling. He systematically reduced his massive Apple position by 50%. He has been selling Bank of America shares. Buffett himself said in his 2024 shareholder letter that he, quote, cannot find anything attractively priced. This is the signal. Trade one is substantially complete for the Oracle of Omaha. But it is not just Buffett. The new financial royalty are exiting too. Jeff Bezos sold over $13 billion in Amazon stock. Mark Zuckerberg liquidated billions in Meta shares. Even Jamie Dimon, CEO of J.P. Morgan Chase, sold stock for the first time. Insider selling is at levels not seen since 2007. Look at the animated graph. Insider selling is spiking sharply, comparable only to 2007. Do not trust the headlines screaming, soft landing. Trust the actions of the people who see the ledger. They are protecting their future wealth because they know what is coming. They hold cash to stop liquidation when the death spiral starts. Market positioning is in the late stage. Trade one is done. Cash is the weapon. But cash only preserves security. It does not create life-changing fortune. The secret is the sequence. The titans are already moving. They are shifting capital from the shield to the ultimate safe haven asset. That next asset, Trade 2, is the metal that thrives when trust dies. We identified the crisis. We launched Trade 1, the flight to cash. Buffett holds $325 billion. Bezos and Zuckerberg dumped their stock. But holding cash is not enough. Cash is a liability when governments panic. The system is rigged against paper currency. You need defense. Cash loses value to inflation and currency cheapening while you wait. Watch the dollar bill slowly dissolve. That's why the greatest financial minds execute Trade 2. Trade 2 is gold. It is the currency of fear. The moment the elite see the bubble bursting, they swap vulnerable cash for rock-solid gold. This move happens right alongside Trade 1. Gold is not an investment hoping for growth. It is the 5,000-year defense for wealth. Bernard Baruch, who made fortunes in previous panics, understood this perfectly. As the 1929 market peaked, he converted huge positions to physical gold. Why? Baruch knew the crash meant deflation at first, but the government's fix would always be the same: printing money and inflation. Look at the sepia images of the 1929 Wall Street floor chaos. In 1929, gold held its price, even as paper assets went worthless. 5 years later, the predictable happened. President Roosevelt reset gold from $20 to $35 per ounce. This instantly gave every gold holder a 69% gain. Baruch got wealthier times after the crash than he was before it. That is the power of the sequence. Gold works even in short, violent cycles. The 1987 crash recovered fast. Yet, gold, starting around $300, spiked violently to $475 during the October panic. That was a 58% gain during peak fear. Gold is the ultimate insurance. See the chart of the 1987 gold price showing that sharp spike. The pattern repeated perfectly in 2008. Tudor Jones held gold alongside cash. It paid off immediately. The math is simple physics. The government prints money. The currency weakens. Gold goes up. Gold was $600 an ounce in 2007. The crisis hit. The Fed printed. Gold surged to $1,000 by March 2008. It peaked at $1,900 in 2011. Watch the printing press churn out money, instantly transforming into a stack of gold bars. John Paulson put huge amounts of money into gold, making billions. Investors who held gold from 2007 to 2011 tripled their money. Stocks barely moved. Gold preserves purchasing power when the state gets desperate. Stop. Forget history. Focus on the present. The system is screaming the truth. Stop being skeptical. This isn't isolated billionaires making moves. This is global power preparing for financial war. The move is accelerating. Central banks are buying gold at record rates. The institutions that dictate global policy are preparing for financial war. They purchased over 3,000 tons of gold between 2022 and 2024. Look at the towering 3,000-ton block of gold dwarfing all previous records. That is the highest three-year total since 1950. China, Russia, India, Turkey. They are hoarding. Why? They are moving away from the dollar. They see U.S. debt they cannot sustain. They know currency cheapening is guaranteed when the next crisis hits. They know the printing press is ready. Ray Dalio says hold 5% to 10% in gold. Stanley Druckenmiller holds huge positions. Tudor Jones calls gold the essential hedge against debasement. See the triptych portraits of Dalio, Druckenmiller, and Jones. They are executing trade 2. The price confirms the panic. Gold trades around $4.500 per ounce. This is not luck. That record high proves the world's elite are swapping paper for the only asset the state cannot destroy. Trade 2 is essential for wealth preservation. The sequence holds cash for defense, gold to protect the cash. But cash and gold only shield you from loss. They do not capture the explosive, life-changing wealth generated by the collapse. That requires the final trade, the mechanical move that turns global fear into your fortune. Here, the heavy steel door slams shut. Trade 3, volatility. Defense is over. We conserved capital. We secured our assets. Trades 1 and 2 are complete. Now, the pivot. The world's greatest investors stop defending and go on offense. This is trade 3, the profit weapon. This trade turns global fear into profit. It uses special contracts, tools that explode in value when markets collapse. This is the hardest, most complex step, done 6 to 12 months before the final crash. Watch the gears clicking into place. This is how a failed system builds family fortune. To understand the destructive power of trade 3, look at 1929. Joseph Kennedy saw the end coming. The market was blind, running on pure greed. Kennedy positioned himself. His main weapon was simple, brutal shorting. Shorting means you borrow shares, sell them high now, and wait. The ticker tape was screaming a high number. Kennedy wasn't waiting for a small dip. He waited for ruin. He established massive short bets throughout late 1929, betting the whole structure was hollow. When the October crash hit, the bet paid off instantly. Stocks fell 30% in days. The financial landscape turned to ash. Kennedy bought back those shares at collapsed prices. He returned the stock, pocketing the massive difference. He made up to $50 million from those short positions alone. It wasn't luck. It was the mechanical execution. The cycle repeats. Trade 3 strikes again in 1987. Jones raised cash. He bought gold. Then came the execution. He didn't use simple shorting this time. He used highly leveraged contracts, put options on futures. A put option is the right to sell an asset at a high price, even if the market falls to zero. It is a small key that unlocks a vault. It is the ultimate insurance against prosperity. Black Monday hit, October 19, 1987. The system broke. The Dow fell 22.6% in one session, the largest single-day drop ever. Chaos reigned. Fortunes vanished. Jones's put options exploded. He made $100 million in one day. His fund finished the month up 62%. You don't just survive the collapse. You turn its violence into cash. Look at the sheer scale of the fire sale. Stop. Don't think 1987 speed limits modern potential. When the housing bubble peaked in the 2000s, Trade 3 needed an update. Michael Burry and John Paulson, the heroes of The Big Short, saw the mortgage cancer spreading. They wanted to short the mortgages. They couldn't. The tools weren't there. They built the weapon themselves. Burry created custom contracts, credit default swaps, CDS, on mortgage bonds. These were insurance policies. Paulson and Burry paid the banks small yearly fees, pennies for fortunes, to bet against the very banks they were paying. The banks laughed. They called them fools. They insisted this time was different. For 3 years, 2005 through 2007, Burry paid those fees. Then the default started in 2007. By early 2008, the bonds went to zero. The system had failed. Burry's CDS contracts paid out hundreds of millions. His fund made over $700 million. Paulson executed the same trade, but bigger. He collected $15 billion in payouts. In total, he made $20 billion. Look at that mountain of cash. Paulson personally made $4 billion. It's the same playbook. Every time. Cash, gold, volatility. The tool changes. Shorting, options, custom swaps. But the mechanical movement never does. You use fear bets to profit directly from the collapse. Where are we now? The Titans signaled Trade 1, cash, and Trade 2, gold. We're deep inside the Trade 3 window. Commercial real estate default swaps are already surging. The smart money is arming itself. See the ticking time bomb of bad headlines. But the sequence is not finished. The collapse is not the finish line. The collapse is the required step for the defining move. The implicit fourth trade is what separates the survivors from the financial predators. This is buying assets at the rock bottom, using the cash you saved and the profit you generated from Trade 3. That is the generational wealth transfer. We have the map. We have the sequence. The timing of that final essential purchase is the one variable that decides everything. Prepare for the fire. You must be disciplined enough to walk back into the ashes when the moment arrives. Are you ready to deploy the final move? We track the giants. We know the sequence. Trade 1, the cash position, signaled the start. Trade 2, the defensive play, central banks hoarding gold, confirmed it. Now, the final stage is here. We establish the only trade that pays when panic hits. Trade 3, the volatility engine. Watch the digital clock tick over. The countdown is finished. Trade 3 is happening now. It's a precise, high-stakes bet that volatility will explode. The trigger is the commercial real estate time bomb. Smart money knows the cycle is breaking. They are buying insurance against the chain reaction. The enemy is debt, specifically the toxic chains tied to empty office buildings. Look at the mechanics. Office buildings are 40% to 50% empty. Remote work is permanent. Owners took mortgages at 3%. Now, those loans expire. They must refinance at 8%. Cash flow vanishes. Defaults are cascading through 2025 and 2026. This is structural failure. It is not speculation. The cost to insure against these defaults has spiked 300% to 500% since 2021. That spike is the sound of smart money placing its bets. They are buying default swaps on these mortgages, CMBS. They pay high fees because they know these swaps must pay out massively when the losses hit next year. The hedging doesn't stop there. Trade 3 has 3 weapons. First, the CRE swaps. Second, direct volatility bets. Institutions are buying massive put options on major indexes set to expire in late 2025 and 2026. The ratio of protection bets versus bullish bets is already high. They are not chasing gains. They are securing survival. Third, the VIX. The VIX is the market's fear gauge. When panic hits, the VIX explodes. They are betting volatility will surge. Huge VIX call purchases, set for 2025, are locked in now. This is the playbook Bill Ackman used in 2020. He turned a $27 million hedge into $2.6 billion in weeks. That same panic trade is being done everywhere now. We know the timing because the pattern is mechanical. 1987. Peak on October 2nd. Crash 17 days later. 1929. Peak in September. Crash 7 weeks later. Once Trade 3 is locked in, like it is right now, the crash window opens 12 to 18 months later. Late 2025 or 2026. Impact guaranteed. The ghosts of 1929 headlines are already writing tomorrow's news. Stop. Stop telling yourself, this time is different. Modern complexity is the accelerant, not a shield. The pattern repeats. The only variable is where you stand when the tidal wave hits. Look at the numbers. Ignore the pattern, and you lose 30% to 50% of your wealth. Most people lost everything in previous crashes because they waited. Waiting is already losing. The river of paper money dissolves. When the trigger pulls, the system snaps. Unemployment will spike to 9% or 10%. The S&P will fall from 600 down to 500. Bitcoin, the speculative darling, will crash below $20,000. But there is one exception: gold. Central banks must print unlimited money to stabilize the panic. Gold will surge past $5,000. Watch the gold bars ascend rapidly as stock charts plummet. The full cycle takes 18 to 36 months. We covered the 3 protective trades. Now, the ultimate secret: the implicit fourth trade. The fourth trade is the single greatest opportunity for family fortune you will ever see. It is deploying your capital, the cash you saved and the profit you generated, when the world is screaming in fear. When the S&P bottoms out, mid-2026, you must buy. When unemployment hits 10%, you must buy assets. You are not buying today's inflated prices. You are buying the fire sale caused by pure panic. Leverage the fear you banked from the first 3 trades. Look at the stock chart, hitting the bottom, then launching up. Do not lose 30%. Profit 300%. The secret is not timing. It is mastering the sequence. Execute trade 1 now. Secure trade 2. Prepare trade 3. Wait for the bottom for trade 4. If you fail to act, you become the liquidity the titans feed on. Follow the trades. Secure your future. We analyze the map. We watch the titans move. Now we execute. The secret to profiting from inevitable crashes is mastering the sequence of 3 preemptive trades. This isn't guesswork. It's mechanical repetition. The interlocking gears of the financial machine are turning. Trade 1 is the ultimate defense. Buffett holds $325 billion in cash because this prevents forced liquidation. You cannot buy the future if you are forced to sell today. Simplify the defense now. Take your core equity exposure, that 60 or 70% you hold, and ruthlessly reduce it. Move immediately to 40% stock investment. The difference? Hold cash or short-term bills. This is your dry powder. This is your shield of stacked dollar bills. Trade 2 is the wealth preserver, the golden hedge. Central banks are not stupid. They accumulated 3,000 tons of gold. They know the government must print money to stave off disaster. The dollar weakens. Gold preserves wealth. Allocate 5 to 10% of your portfolio now. Physical gold or gold ETFs. This trade ensures your capital retains its purchasing power when the river of paper money runs dry. Trade 3 is the profit accelerator, volatility. The smart money buys credit default swaps and complex options. They are utilizing volatility instruments to profit from the collapse. Your version is simplified, direct, and lethal. Buy put options on SPY. This is the profit engine. They must expire in 6 to 12 months, targeting prices 10 to 20% below current levels. This is the insurance policy that pays you a fortune when the market chart becomes a jagged knife. Stop. This is the hardest part. Executing these 3 trades protects your capital. It preserves your wealth. It positions you to profit from the collapse. But protection is merely the foundation for the final move, the action that separates the rich from the generational wealthy. The 4th trade. Those who profit from the crash will buy at the bottom. This trade creates generational wealth because it purchases assets at fire sale prices. It requires true mental toughness. It means buying when the TV screaming heads tell you the world is ending. Deploy your preserved cash when everyone else is selling everything. Look at the record. After the 1929 crash, Kennedy executed the 4th trade, laying the foundation for his dynasty. In 2008, when banks were folding, Buffett invested $5 billion into Goldman Sachs. He bought confidence when confidence was zero. And in March 2020, as the world locked down, Ackman used a $2.6 billion payout from volatility instruments to buy stocks at crashed prices. This is the consistent, repeatable cycle. Your goal is not just to survive the fire, your goal is to own the ground where the ashes lay. Focus only on quality companies that survive crashes. Apple, Microsoft, Visa, Johnson & Johnson, Procter & Gamble. These are the institutions that endure, standing like bedrock walls when everything else liquefies. The difference between successful investors and victims is not analysis, it is mental toughness. The men who mastered this cycle, Kennedy, Baruch, Paul Tudor Jones, John Paulson, Buffett, and Ackman, they possessed this unique steel discipline. You have the map. You have the mechanics. Now, build the discipline. Execute trade 1, 2, and 3 immediately. Lock in the defense. Prepare your mind for the chaos. The moment of generational buying is coming. Secure the cash now, so you can seize the future later. Watch the heavy pendulum swing toward the point of maximum fear, ready to strike the buy button.